Traders, Nick Shaheen here, looking at Microsoft. Good company, good price action. This is 1 year's worth of data. Every candle is 1 day. So, but before I forget, at the top right left of the video, at the end, there will be a pop-up. If you don't subscribe already to my YouTube channel, go ahead. It's free, and I post all the time on it. So here we go. Obviously today is what, 827, a bullish open, kind of a fake out of sorts, but there were a lot of signs to indicate that. But now we're looking at Microsoft inside the prism of this macroeconomic headline trading condition, so to speak. So clearly, without any lines, I have tons of lines drawn, but without drawing any more new lines, this is a constructive price action, maybe a little too constructive, so it leaves it kind of dangling. So fundamentally, I think it sells at a PE of 28 or 29, trailing 12 months, so it's real results rather than forecast, so it tends to be higher than, because the forecast, usually they forecast higher prices, and that's the numerator. So it's not bloated, but it's not cheap. If you compare it to Apple, which is 10 points lower, Apple is like 18. But they're not comparable in the eyes of Wall Street. I can tell you one thing right now, right off the top, that this right here, which is, what is that, 132 to 130, is a pivotal zone, meaning on the way down it should provide support, but it's also, if breached, it becomes a bearish opportunity for those who would like to sell it lower. So why is that? Because right here on the way up, now we're talking technicals, so we agree that the fundamentals are great. The technicals, we'll see. Resistance, and then breakout opportunity, proven support. When is that? In August. So recently, again and again. And if it continues to be support with a question mark, if it fails, then they will bring it down to the next level. An eyeball, I can tell you it's probably somewhere down here. So I'm not calling it down there. I'm just saying that this is support, proven, question mark. If it continues to be support, this whole area, then something will happen on the upside. Bulls know that they have footing, then they can stomp on it, so to speak. Another mini level is right here, which is coincidentally, not coincidentally right here. So 132.50 is first alarm bell on the daily chart. What about the other side? Well, we have a narrowing range. And then it's going to come to a point somewhere in time in the next few days, break out or break down. That's what's going to happen technically. Don't care about the headline. Technically, this is what's saying it's going to happen. I'm going to get a little more granular. And let me put back my drawings. Okay, so what is this? 2 hours, 120. Let's go to 120. Heck, let's go to 60. Okay, so now 1 hour candles. So technically, we left a lot of opportunity here. That quickly faded. So I can blow that out and declutter the chart. That didn't happen. So now we have a, let's mark it up. What a wild day. I'm watching. Markets open, by the way. Those were two opportunities. So you can say that this is definitely R. This is definitely R, which is an opportunity going forward. I have to keep that in mind. Now for this range, since August 29th, July 29th through now, this is the place where bulls and bears fought it the hardest, which doesn't surprise me that they failed at it. Because as price rallies, hey, this was a good level to fight it out. Boom, 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 boom. They fight it out again. And look at this right here. That one tick right there is telling. So it is the platform to break before we can go higher. And it's not a hard line in a sense. Sometimes it looks like it. Like this is very finite. You can see it. So you can put a target right there. Now, but there are some things to look inside. Now, for the last few days, we have had a nice trend here. And I can tell you that the next fight is going to be around this line right here. It's a moving target. So I'm not going to say 136, but it could be 136. So for round numbers, I can use that mentally. So above 136, I would like to see the bulls go above it and then use it as support so they can power up. Otherwise, they do have a failure level, a bug out level, which is this. Let's go find out what that was later. And then another bug out level, 134. So I'm going to say 134.80 eyeball, 134, and then 130, what was it, 2.5 we said. would be the run for the hills short term. So 134.70, man, my eyes. So, and if you look at it, it looks like a mini Head and Shoulders. So 134.70 will bring a test of this, which in must hold, but look, a mini gap down here. So I don't really, if I'm long term, I don't bug out until here, because look, this looks like a, All right, I'm going to scare people here a little bit, because it's good to be scared on days where market action is just so headline. I mean, today the stock market fell off a cliff because some magazine editor in China said something about, well, he's well connected, or she, I don't know. They're well connected, and they didn't hear about these talks that the White House mentioned. All right, so not quite a Head and Shoulders, because the one shoulder is higher than the head, but you can see that 2 attempts, and the third one is failing here. So whatever happens, if it fails and comes back to here and they don't bounce and they lose it, so what I can see is a neckline that's lost, and usually they carry forward lower. And I've said this twice before and it hasn't happened. Right here it almost happened. It took leg 1, which brought it to here, and then bounced and never took leg 2, because that's the bounce. Came to here, I said maybe now it finishes the job. Nope, it didn't happen here either. Here it didn't happen. Will it happen here if it gets the opportunity? That is a higher time frame than the one I just looked at earlier. So this is a slice of Microsoft on 3 different time frames. First I went a daily chart without any markups, and then we spoke about that, and then we marked it up, went to 120 for granular, and then 240. Man, before I go, look at this collection right here, 135. So keep that mental note right there. 3 dojis in a row, almost exactly at 135. What's a doji? All right, lesson number 2. There's a doji. So I'm going to zoom at it and speak to what's a doji. I am Main Street. I learned this stuff on my own, so I'm going to speak it in plain, simple English. So that, let's say that day. It's not a day. It's a period of time, shorter than a day. They got to it. They opened. They tried to fall. They bounced it back up. They tried to rally. They failed. They came back to where they opened. They said, you know what? I hate it. I love it. You know what? I have no idea. I'm going to go back to exactly where it opened, and we'll figure out tomorrow or the next tick. And that's a doji. So 1, 2, 3. They didn't know. Sell, no buy. Sell, no buy. Sell, buy. For 3 periods of this 120s. Okay, so 3 times 120 minutes. Complete indecision. Right at the tail of this. So this is clearly a level that comes back to haunt us, or comes back in play. So I'm going to highlight this as a parting point here. All right, so this was a general way. I'm sharing my general way. This by no means says buy it or sell it, to see what levels I expect. Most of my charts have, all of my charts have up and down. I don't know which way it's going to go. I just want to be ready to know the limits. So I'll put this at the open of the day, and if I'm a day trader or something, and then I'll say, okay, as soon as it breaks above this, I chase it. As soon as it goes below that, I trail it, or I get out of my longs. So if I don't know the levels, I don't know where it's going to go. I know the potentials of up and down, but then I can dial in and set my trading according to the levels I have. So this is the way to study the levels ahead of time. So to be a better trader, Nick signing out. You know where to reach me.